Okay, good afternoon. I'm Alexandra Klitina, a journalist of Kyiv Post. Please subscribe our YouTube channel. Do not miss my exclusive interviews. And today with us, Brian Best, head of investment banking of Dragon Capital. Dragon Capital is leading investment bank in Ukraine. Good afternoon.
Good afternoon.
My first question is Russia's war in Ukraine could cause energy crisis or economic collapse of EU, as Russian propagandists say?
Good question. I think that economic collapse of the EU is probably an exaggeration, but there will certainly be some economic hardships going forward. Certainly this winter, as energy prices are going up, and they will go up unilaterally across Europe. And for those countries that depend on heating and gas during the wintertime, they will feel the pain of these economic changes that are going to take place. But I don't think that this is something that will lead to a full collapse of the European Union by any means. However, I think it'll put some stress. Western countries and Western allies' strength and determination to support Ukraine. All indications so far from the political leadership around Europe is that they will continue to stand behind Ukraine despite these adversities. But time will tell whether or not people survive this economic winter.
Surely. According to some analysts, sanctions against Russia is not effective due to growth in energy prices. And actually, that Russian budget getting more revenues by selling less. Is it true?
I would say yes and no. It's true that they're probably earning more right now, even with these sanctions, because the prices of these commodities has gone up considerably. But they are selling less. But regardless, they're probably earning more today than they were before the war. But I don't think that means the sanctions aren't working. I think that we need to look not at the short term with regards to sanctions. We need to look at the long term. And in this respect, I think the sanctions are working quite well. No one can expect that a country, for example, like Germany, can immediately switch its gas and supplies from Russia to another country overnight. It just can't happen. But the fact that they've committed to do so, by the end of 2023 or 2024 is incredible feat for even a country like Germany. So I think that the sanctions will work. It just takes some time. But I think where they are working is in technology transfer. And this is something that Russia, which has immense natural resources like oil and gas, they can earn as much money as possible from oil and gas, but if they can't spend that money on modern technology to replenish their weaponry and their armory in Russia, then those sanctions are working. They have a hard time continuing to fight a country with huge support from the West. So I think the sanctions are working on the technology front, and they will work on the economic front. It's just going to take a little bit more time.
But there are some discussions and even decision on limiting buying price of Russia's oil and gas. Do you think it will help to reduce revenues from energy trade?
Well, certainly any kind of a price cap on purchased Russian gas or oil would have a positive impact for Ukraine and its allies, because it would limit the amount of money that Russia can make on selling its commodities. However, I don't know how easy that is to implement. I'll leave that to Brussels and the politicians to decide how easy that is to put in place. But from a pure logic and mathematics, it would certainly help.
Do you think is complete embargo on Russia's gas possible in Europe?
I think it is, but this is what I was saying before. It just will take some time build the capacities to import from other sources. And I think this was probably, in the long term, a good thing for Europe to see that they were so dependent on one single supplier of energy resources, to be able now to diversify that risk, engage with other suppliers of energy resources, build those capacities to get those energy resources to the European continent, will, in the long term, be very beneficial to the European Union and the Europeans overall. How long that takes is another question, but I think all the governments are working actively to implement that and to get that in place as quickly as possible.
What, in your opinion, is economical strength of Russia? How long Russian authorities will have resources to continue this war, in your opinion?
That's a very good question, and Russia's strength is in its resources, and it's been selling those resources since the Soviet Union collapsed at huge rates, and that's been providing strong economic growth to Russia for the last 25 years. Good if Russia uses those funds to diversify its economy. And unfortunately for Russia and the Russian people, that hasn't happened. And so Russia has an economy that's extremely dependent on natural resources. And it doesn't have other industry to rely on, such as IT or large agro-industrial industries and things like that, that it can diversify those funds into those other sectors of the economy. So as a result, they're very highly dependent on natural resources. Now, as the world starts to turn their back on Russia as a supplier because of its aggressive war on Ukraine, it will have fewer and smaller markets to sell those natural resources to. And so as a result, long term, this will have a big negative economic impact on Russia going forward. And I believe that after this war, this will take 10, maybe even 20 years for Russia to recover from what it's losing as a result of its aggression on Ukraine.
The economy of Ukraine or Russia suffered the more from this war, in your opinion?
Well, certainly Ukraine has suffered more than Russia on a relative basis. I mean, Ukraine is the one being attacked. Massive amounts of critical infrastructure are being destroyed. Cities are being destroyed, houses, buildings. Ukraine isn't attacking Russia. So the only thing that Russia is losing is demographic. Because people are dying on the battlefield, and that's going to have a long-term negative impact on Russia as well. It already has bad demographics. Longer term anyway, Russia was going to suffer economically, but now it's just going to speed up that suffering because people are actually dying on the battlefield. But Ukraine hasn't hit Russian infrastructure, it hasn't attacked Russian territory. And that's where Ukraine is suffering more than Russia is.
What challenges do you think now facing Ukrainian government, and is the national bank will be able to keep hryvnia's exchange rate stable?
They're doing the best they can, for sure, but in order to keep the hryvnia stable, we have to have inflows of foreign currency. That's been challenging because of the war, mainly because of the blockade at the Black Sea in the first part of the year, which kept Ukraine from being able to trade grains and other minerals on an international scale. And that limited the amount of foreign currency that can come to the country. So as we saw, the government was forced to do a forced devaluation of the currency. Right now, the currency has, the spread between the national bank official rate and the cash rate on the street has been about 10%. It's gone up over the last couple of days to around 15-16%. I think if it goes up to 20-25%, they will probably have to do another devaluation, a small devaluation of the currency to try to bring it back into parity. With the increasing of agricultural exports, I believe that there is a chance that we can escape having to devalue the currency as long as we can continue getting agricultural product out of the country.
So what about M&A activities? Is there any deals despite the war? Also, I know that Dragon Capital is working with the government of Ukraine a lot. Is something interesting going on now?
Yeah. Well, certainly investment activity has slowed immensely since the beginning of the war. With that said, I think there's been a few M&A transactions. We've completed 2 transactions this year in M&A, one right before the war started and one after the war started. Both of them are in the IT space, so it's not a sector that is really dependent on Ukrainian territory. These are all export-oriented businesses. The people are either mobile or they're able to work remotely anyway. So those types of transactions can still go ahead. And then recently, Kyiv acquired Healthy Technologies or Healthy Services, which is a information collection business in the IT space. So M&A is happening, but it's happening at a much slower pace than what we're used to naturally. But I think it'll start to pick up. Mostly companies, Ukrainian companies buying other Ukrainian companies. I think for foreign investors to enter the market, what's important is stability and predictability, and that right now during a war is difficult to forecast and to see. So as a result, I think they'll probably wait until there is some form of a ceasefire, or at a minimum, they'll wait until the hot phase of the war is over and they can start to put together some proper forecasts, and in that sense, we might see some more investment activity, M&A activity. As for Dragon Capital's work with the state and state-owned enterprises, we continue to try and help wherever we can. Certainly, the Ukrainian government would like to continue raising funds, and that's important for the country. We have to understand that where rates are today, it's just not economically feasible for Ukraine to do that. So we are developing structures, or helping to develop structures for the government that will allow them to reduce the cost of capital and to attract institutional money to the country, so they're not fully dependent on government funding.
But what about investors that already invested in Ukraine? Are they selling their assets in Ukraine, or they're waiting for war to stop?
Those that could sell sold when the war started. There was a lot of activity on the market as we saw rates jump up, which meant that bond prices were collapsing during the first days of the war. A lot of those investors have already exited Ukraine, and those that did not or were unable to exit are holding their positions and waiting for an opportunity either to buy more at these low prices or to exit at the current market price. But the volume of trades on the market are very low. So there's not a lot of trading activity in the Ukrainian market, unfortunately.
With the last successful developments in the front, there is a hope for Ukraine to obtain the victory. And after the war, it's always a recovery. What, in your opinion, would be investment opportunities in Ukraine?
I think that the investment opportunities will be quite broad. There's a lot to rebuild. Critical infrastructure, first and foremost, which will allow businesses to operate freely. But in addition to that, we need housing. We need to rebuild some of the business infrastructure that was destroyed during the war. We're talking hundreds of billions of dollars of investment capital that will need to come to Ukraine to rebuild the country. Investors, I think, understand that. They are ready to do what they can to invest in the country in the form of new Eurobond issuances, direct investments through private equity, or other kinds of interesting and unique investment structures. So, but people want, as I said before, they want to have predictability and stability before that happens. And once that's in place, I think we'll see a lot of investment in the country.
But first of all, the war should stop, right?
It should stop, of course, so that would be ideal, but at a minimum, a cease to the hot phase of the war would be probably enough to get some investment capital flowing again to the country. As I said, this will be broad-based. There'll be, in my view, a huge amount of opportunity here, and I think it'll be an amazing opportunity for Ukraine to clean up its past and to build Ukraine better than it was.
Sure, thank you for this interview and good luck with your business.
Thank you. It's been a pleasure.
Thank you for watching. Please subscribe our YouTube channel, Kyiv Post. Do not miss my next exclusive interview.